Hi, welcome to the market alert for Wednesday, the 23rd of September 2015. And yesterday morning I said, we're not having much volatility in the pre-market session, and you can see that we had plenty. But I also did follow up with saying, as soon as I've said this, then it's likely we're going to get some, and that's precisely what we did. So the market moves down 250 points in the pre-market session there, all the way down. Just sat and watched it. It's too late to the party on this one. And again, we've not had any pre-market volatility, but this now says that it's back. So that's good news. And sometimes you just have to miss the odd thing just to make sure and confirm that what you're looking for actually does return to the market. So we've definitely got that pre-market volatility there. However, that said, managed to catch this trade for 40 points during yesterday as well. The market rallying up, putting in the XXX and then the PTI, and this trading down to here, and down to here being the, let me just put the data window on, it already was on, down to the psychological level of 16,250. Bearing in mind we've already got 250 point drop in the background. Unless there's a major sell-off, which the plunge protection team are not going to see at the moment until they run out of ammunition, the market's likely to find support, which is why I took the profits at this, and you'll see this on the video of the profits being taken. And then, of course, we go into the quiet period. We get a bit of a bounce back. No buying again. Notice no green bar there. Even though the volume is just slightly above average, there's no green bar. The market coming back. And then you see some buying coming back in here. A bit of selling, and then this disappears. And then we're off for the evening session. We get a buy signal here. And as I keep barking on about, the markets change all the time. You have to adapt to the way that they change. And as I've been saying for the last week now, the PPT bring the market back to the upside before the close. The Chinese have been doing the same as well, following the People's Bank of China pumping money into the market at the close of trade, or just before the close of trade as well. And this is what you're seeing here, which is why you see the short fail now, because they wanted to bring this market back. And bring this market back they did. They brought it back 100 points before the close, but on the overnight we have a problem, Houston, and the volatility is back. And this is because we just go over to zero hedge for a second. Now there's the they do ring the bell at the top. You can see an article there, but if we just go back to the front page, you will see why the market dropped on the overnight, somewhere around here. This is quite funny actually. Keep reporting on bright economic future, China Ministry of Truth demands. Well, they've been lying for the last 4 years, so interesting that they should come out with a statement saying that they want to tell the truth all of a sudden. US equity futures yuan plunge after China manufacturing PMI collapses, and that's why you're seeing this drop here of 100 points in the Dow. Any rallies off this show weakness, and again you could expect some potential short trades there. So that's the reason for the drop on the overnight. So again, the market being dictated by China, which I said last week would, now this silly show with the Fed is out of the way. The old pantomime's gone now until December, so we can rely on any other developments around the world, whether it's the Greek debt coming back or not. The deal still hasn't been done. What I mean come back is come back into the mainstream news to move prices lower, and also the China effect, of course, which is still reporting bad news. There's bad news being reported everywhere. I also read yesterday as well that JCB, which is local to where I live, are laying off 400 people due to global slowdown as well. So all of this complete and utter tosh, to put it politely, that the Federal Reserve talk about economic recovery is an absolute joke. There's no economic recovery. There never will be. There never will be. There is too much debt in the system. But in the daily charts, you can see we've got selling yesterday greater than the buying the day before. Keep going on about this as well. The sell days are greater than the buy days. This is a bear market. We're heading to the downside, and I would expect to see a lot more of this as well. You're going to get days where the market moves up. That's the way markets operate. Prices don't go down in one go. They oscillate, as you're seeing here, but when they go up on low volume, then you can sell into these markets. So you can see today's downside target is going to be the big psychological 16,000 in my opinion. If we get more weakness in the background, I expect this to continue. And news-wise, what have we got at 3 p.m? In fact, let's have a look through the day just to see if we've got anything that would add to the pre-market volatility. German flash manufacturing is forecast lower as well. They've got problems with VW at the moment, taking billions off the stock market. Draghi, the former Goldman boy, he's going to be speaking at 2 p.m. as well, so could be a bit of pre-market activity there. Don't forget, trading the Dow in the pre-market session is really between 6 and 10 a.m. So you won't be in the market at that point anyway, waiting for the official session to open at 2:30. And what else have we got? Oh, they're going to wheel out Lockhart at 5:30 again. This is, and also Broadbent speaking as well from the Bank of England. It's incredible, this is. You can tell that they're starting to really get worried because they keep wheeling these chaps out to try and boost the market, and it's not working. I mean, they can keep doing it for a while. I mean, this is unprecedented. This is. I mean, years ago you wouldn't have a clue who worked for the Fed apart from the Fed chairman, and the same for the Bank of England. But now they keep wheeling these people out, even onto the mainstream business channels, to try and pump up the markets, to reassure everybody that everything's fine. It's nothing but a PR and propaganda stunt. Take no notice of what they say. The facts are the facts. There is too much debt. They can't increase rates because of the knock-on effect of that as well. And the emerging markets are falling apart because of all of the funny money that was printed, that was pumped into those economies, which has now run out, and you're seeing the full effect of that. And finally, let's have a quick look at China, down 2.25. The 3,000 level, as I keep going on about, is a major level. This closes at 9 a.m. It's worth having this open. It's off the Bloomberg page. Just type in the Shanghai into Google and pick it up, and it's worth watching because the market certainly tracks. If we just go to a 1 month chart, we need the market to break down that or through that 3,000. Notice the market's failing to make the highs. You can see there now over the last month it's not going back to the highs we had here of 3,243, even though they keep devaluing and pumping 50 billion a day into the market as well. It's not working, and it won't work. Keep saying this, and I will keep saying it, because no central bank is bigger than a market. When you think that the Dow alone is worth around 47 trillion, then there's no chance of any plunge protection team or whatever. They can do it for a while, but once the fear grips the market and people start to exit en masse, all of the high frequency trading won't cope with it, because that's only ever worked in the upside. Then you'll see all sorts of weird things happening, like stopping the market from trading for 15 minutes and all that sort of nonsense as well. But it's got to be a controlled descent, as I've said to a few friends. It's got to be controlled. They're not allowed to crash the system, but you'll see there's weakness there all in the background. And in the implied volatility, this up 18.86, not up a great deal yesterday, considering a 300-point drop in the background there, but moving back towards the upside there for yesterday. Right, that's it from me. I will see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support and also for watching. See you in the next one.